What is your view of what the data are telling us?
Well, you're right that we've seen a bounce back in some activity, particularly the services PMI. You've also seen a pretty big bounce back in consumer confidence since December. A lot of that confidence data has to do with the fact that inflation has come down. And I think the headlines and the headline data on inflation has told us that inflation has come down, but you are right, too, to ask, does the Fed have a services problem? I do think that they will end up having a bit of a services problem. I don't think right now there is a huge alarm bell going off. Obviously, we've got activity coming back, and we've got a decent amount of optimism in the current economic data. But when you look forward about 3 to 6 months, if that services inflation stays high, the overall number is likely to get stuck at a level that is above where the Fed is comfortable. And I think that's really what's giving investors some consternation today. And we're seeing a sell-off in the markets as a result.
Well, it's not just a problem for central banks either, arguably, Liz. It's a problem for corporate America. If you just look at Home Depot saying they have to spend another $1 billion to pay people more in their stores. Is this a corporate profit problem, too?
Yeah, well, again, today, maybe not. But in the next 3 to 6 months and throughout the rest of 2023, I would expect profit margins to continue to compress. They've already come in quite a bit. The good thing about it, and this is where some of the soft landing camp comes in, is that we started all of this market pressure with record high profit margins. So there was a decent amount of what I'll call bubble wrap around the profit margin story. There was also a decent amount of bubble wrap around wage growth, and there's a good amount of bubble wrap around the labor market. So there's a lot of pain that can be withstood in some of this data before it really becomes troublesome. But as we're hearing slowly from companies, profit margins are expected to come down, and it's really the mix of how high will revenues stay versus how much can they cut their costs in the meantime.